If you've ever seen screenshots like this floating around the cryptocurrency community and wondered exactly how many individuals were making steady profits, you may have heard of something called crypto perpetuals or crypto derivatives. And in today's video, I'll be explaining to you the ins and outs of this, exactly how it works specifically for beginners. So don't forget to pay attention because this video will tell you everything you need to know in order to get started. So what is spot? Spot is very simple. This is the type of purchase where if you own $100, you can buy $100 worth of crypto. This is something that is remarkably simple and is pretty much available to everyone on all major crypto exchanges. It's the most common form of purchasing, but that's not what we're going to be discussing today. What we'll be discussing today is called leverage. Now, the difference between spot and leverage is that leverage is a multiplier. Leverage allows you to buy more than you currently have, and leverage increases the gains and the losses. There'll be a lot more on that later. Let's take a look at a leverage example. So right here, let's say we have $100 to start with. And let's say we want to take a trade with $1,000 of Bitcoin. We can use 10x leverage to borrow $900 worth of Bitcoin. This means that we take our initial $100, times that by 10, and then we get $1,000 worth of Bitcoin. So you can see right here that this is a very basic example on how you can get more when you start with less. But now let's continue the example. Remember, we started with just $100, we wanted 1,000, and we used 10x leverage. We then borrowed $900 when we hit the 10x leverage button, and now we have $1,000 worth of Bitcoin. Now, with $1,000 worth of Bitcoin, we have to remember our risk. Our risk is the $100 that we initially put in. Remember, the entire $1,000 is not ours. It's only our $100 that we previously have. So when we enter the trade, our max loss is going to be $100. That's because that's all we've deposited. But on the flip side, our max gain is nearly unlimited. So let's explore some examples after depositing $100, and let's say the price of Bitcoin moves. So let's say we now, of course, have entered the trade, we put $100 in, and let's say Bitcoin moves 1% up. If Bitcoin moves 1% up, your balance is now going to be $1,010. Your profit is now $10. Your gain on your investment is now 10%. If you want to understand how this is calculated, remember, this is calculated on your virtual balance. Because we use leverage, our virtual balance has been $1,000 worth of Bitcoin. And because that all decided to go up a bit, we can now take profits on that. And the profit is now $10. So our gain on our initial investment is 10%. But let's say things get a bit more crazy and they decide to improve. Let's say Bitcoin moves up 10%. If Bitcoin moves up 10%, your balance of Bitcoin, your virtual balance, will now be $1,100. And your profit is now going to be $100. That means on your initial $100, your return on investment is 100%. You've effectively doubled your money. Now, of course, that sounds very easy and very well and good, but we have to look on the flip side. What about if price goes down? If price goes down 1%, your virtual balance will now be $990 worth of Bitcoin. Your profit is now minus 10, and your gain on investment is minus 10%. This is because, of course, you were owning the Bitcoin, but now that it's gone down, remember, your initial balance, your entire collateral was only $100. So now they've minused the $10 because, of course, you've just lost it on the trade and your initial investment has lost 10%. Now, let's say you entered the trade and Bitcoin accidentally moves down. So you've entered a long position, which is where you're betting on the price of Bitcoin to go up. And let's say the price of Bitcoin moves in the opposite direction. So if Bitcoin moves down 10%, this is where you get liquidated. Your balance will go down to $900 and your profit is now minus $100 and you automatically get liquidated. This is where you can lose your entire investment and you essentially lose 100%. Now, this is why you need to be careful with leverage, because if you don't understand where the price of Bitcoin is going to go, your virtual balance could come down. And remember, this borrowed money that you borrow from the exchange, they won't ever allow you to lose the exchange money. You're only ever going to be able to lose the amount that you deposit. That's why I'd always recommend to deposit a very small amount before you understand where you're going. So of course, because you went long and you predicted the price to go up and it went in the opposite direction, you effectively lost your initial investment here. And because you used 10x leverage, because the price of Bitcoin moved to 10%, 10 times 10 is 100%. So anytime you're thinking about leverage, just think about it like this. If the underlying price of the asset moves in a percentage way, let's say 1% or 2%, whatever your timesing the leverage will be, basically you're increasing your gain or loss by that amount. So if you predict the price to move up by 1%, like in the first example, and we have 10x leverage, then you're basically multiplying that gain by 10 times, effectively changing your profit from a measly 1% to a 10%. But of course, if Bitcoin moves up 10% during the time of your long position, now you're going to be up 100%. Another thing that people talk about is the fact that you can have advanced leverage. And I would say that anything above 10x leverage is what I would call advanced leverage. This leverage is not for beginners and you can get liquidated very quickly. However, you can make a lot of money very quickly. And I would say for these bets to be made, you need precision and a lot of liquidity. This is because the higher leverage you use, the more precise you need to be. Some exchanges offer 50, 100x, 200x, all the way up to 400x leverage. I know that it seems very, very incredible that they can offer this amount, but some exchanges allow you to really push the needle when it comes to investing. But you have to remember, the more leverage you use, the harder it is for you to make a profit because you need to be so precise on your entry that a move in either direction could wipe you out. Think about it like this. If you're using 50x leverage, price only needs to move 2% for you to get liquidated. If you're using 100x leverage, price only needs to move 1% for you to get liquidated. If you're using 200x leverage, price only needs to move 0.5% in one direction for you to get liquidated. And for 400x leverage, it's 0.25% for you to get liquidated. You have to understand that this is super, super small. So I would steer clear of this type of investing. I would always say stick to 2x, 5x, 10x, or max 20x leverage. It's much easier and it's much safer and you're less likely to lose money. I frequently do use 100x leverage sometimes, but I do know that a 1% move can result in a 100% gain or loss. And I have to understand that my entry must be perfect and my entry must be timed. And with those trades, I never ever enter them late and I always make sure they're timed specifically on an exchange that has deep liquidity. Because if your exchange doesn't have a lot of liquidity and your trade gets entered after the major move, you are going to be in a very bad position. But like I said, if you're a beginner, don't even think about using 100x leverage or you most certainly will lose your money. For the purpose of this video, let's take a look at why using advanced leverage like 100x leverage is so dangerous. Let's start with the same amount that we used before, and let's say we wanted to buy $10,000 worth of Bitcoin because we thought the price was going to go up. We use the 100x leverage and we borrow 9,900 from the exchange. So we do 100 of our initial dollars times 100x leverage, and that gives us $10,000 of virtual Bitcoin. Let's say Bitcoin moves up 1%. Now that 1% is affected on the 10,000 virtual dollars that we do have. Now our profit is $100 and our gain on investment is 100%. This is great for us. Let's say Bitcoin moves up 10% in that time. Our balance is now at $11,000 and our profit is $1,000. That would mean our gain on investment is 1,000%. Of course, we have to remember that in that time, the price of Bitcoin would have had to not have dropped to our entry level below 1% or we would get liquidated. For example, let's say Bitcoin moves down 1% after we enter that trade, our virtual balance would be 9,900 and our profit would be minus 100 and our gain on investment would be minus 100%. This would be rather unfortunate and this is where our position gets liquidated. Remember, because we went long and we bet on the price to get up, since it went down 1%, that is why we got liquidated so quickly. And that is why this is quite dangerous. So remember, never use 100x leverage unless you are absolutely certain the price is going to go in your direction without moving 1% or more in either direction. And as we know with cryptocurrency, it can be very, very volatile. Now, if you're wondering how traders actually make money, oftentimes they will try to get their account to around $100,000. And what they will try to do is aim for around 1 to 3% gains so that they can make around $1,000 to $3,000 per trade. And with that kind of money and capital, you don't really need to use ridiculous amounts of leverage. That's how majority of traders are making money in those markets. Now, some traders may play with leverage. Some may use 20x, some may use 70x. There is no correct formula, but usually the lower amount of leverage, it's going to be a lot better for you. Because of course, you have to be less precise and there is a lot of wiggle room to making money. Now, one of the things you need to be aware of when you are trading is fees. Some places have higher fee than others. For example, Jupiter has fees for opening and closing trades. They cost 25 cents for opening the trade and 25 cents for closing the trade. So you have to factor these fees in, especially if you're trading a small account. Oftentimes, people will be trading an account, opening multiple positions and not realizing just how much it costs. But there'll be more on which exchanges to use later. Now, there's also something called funding fees. Funding fees are periodic payments between traders in perpetual futures contracts to keep the contract price aligned with the spot price. Basically, if the funding is positive, the longs pay the shorts, and if the funding is negative, the shorts pay the longs. This is a peer-to-peer payment, and it's not something you need to worry about that much. These fees usually change every 24 hours, and it will be a really small payment that you don't need to worry about because it's only affecting those people who are dealing with millions and millions of dollars. Now, you have to understand also that there is maximum position sizing. Some coins only allow for you to trade a virtual balance of around $100,000. Some only allow for $10,000. Some newer meme coins, sometimes they'll only allow for $5,000 when you're using leverage. So it's important to check that and verify that before you're starting to trade. In addition, when you're trying to use leverage, some coins allow for maximum of 400x leverage like Bitcoin, and some only allow for 3x leverage. This is because some coins are super volatile and they want to limit this volatility by using much less leverage. This usually applies to coins like meme coins, and usually you'll be able to see that on whichever exchange you're using. Now, when it comes to exchanges to use, there are many different exchanges. There are two types. One of them is the SECs, the centralized exchanges. Now, these usually require KYC. However, most people get around this by using a VPN. You can see exchanges like Binance, Bybit, 2bit, OKX, or Mexi, which is the exchange I use, are really great because they have deep liquidity and you can enter and exit trades with remarkable accuracy. However, there is a new kind of exchange that is becoming increasingly popular. This new kind of exchange that is becoming increasingly popular is called a DEX. This is a decentralized exchange. This has no KYC required, meaning that you don't have to put your ID in and other details about yourself to an exchange. However, these exchanges usually have less liquidity and it takes more time to enter a trade. So it isn't really great for scalping. It's more for taking long positions and short positions on the market, or essentially swing trading on higher timeframes. However, they are really good in the sense that anyone can trade them and it is decentralized. Now, if you'd like to start trading with futures, as always, you need to be super careful. I see people time and time again depositing $100, $200, when in reality, you want to test your strategy with $2 to $3 per trades. One of the things I like about futures is that you can literally start with $1 or $2, and it works really well because the percentages are there. And that means that you can literally scale up whenever you feel like it. There's no minimum amount to trade with. You can start with $2, $3, $4, and you can see if you're becoming profitable. That's what I would do if I was a beginner. Start with $5 per trade, see if you're longing or shorting, how much money you could make in terms of the percentage gains, because that's what you want to focus on, and see what works. Another thing as well is don't gamble. When I started out futures trading, one of the things I often did was seeing how much money I could make in such a short time. And I would often blow trading accounts because I knew that crypto was extremely volatile and I could make a ton of money in a very short time. However, you'd never want to do this because you can lose money very quickly. It's always best to start small and scale slowly. Start with $1, test your trades out. Then when you're comfortable, move to $10, test your trades out. Then move to $50 and test your trades out until you can get to $100. And as you can grow your account. Now, of course, if you'd like to join me in my trading, I will show you guys exactly what I'm doing every single day in my Telegram. Don't forget to join the community because that's where the access to resources will be.